Thank you for joining me this Friday, the 20th of January 2023. I'm Grady Wolf, a market analyst with Bell Direct, and welcome back to the first weekly market update for the new year. Airline stocks felt some much-needed relief in 2022, following a grounding both on the share front and flight front during the pandemic amid international and domestic border closures. Demand for travel has never been higher than in recent times as borders reopened and Aussies with tons of saved-up cash were ready to book a much-needed holiday. Shares in Australia's national carrier and market leader Qantas are trading 25% higher over the last year at $6.56 as the Flying Kangaroo and subsidiary Jetstar ramped up capacity to carry 8 million passengers over the Australian summer. Qantas flew the highest proportion of domestic passengers in October 2022, with 38% according to the ACCC, while Jetstar flew 23.1%, taking the airline's group total to over 61%. With increased capacity came heavily increased ticket prices that airlines attributed to rising petrol prices, labour shortages and inflation. Subsequently, the ACCC put Aussie Airlines on notice after revealing a 27% increase in all airfare types between October 2019 and October 2022. The ACCC report also outlined the cheapest domestic airfares in November 2022 were more than double that of prices in April and were a high not seen since 2004. The prices shot so high that many consumers turned to overnight trains and coaches between Sydney and Melbourne during this time. The consumer watchdog is now setting its sights on all airlines throughout 2023 to ensure carriers aren't intentionally slowing their return to full capacity and service as a means to justify the sky-high prices, especially as airlines like Qantas, Virgin and Rex all expect to be profitable in the FY ending June 2023. Increased competition is also coming into land down under with the launch of a new low-cost airline, Bonza, operating across regional Australia. The airline is deemed an ultra-low-cost domestic carrier with 5 737 MAX jets operating across its 17 destinations. The emergence of a new budget carrier is also hoped to help ease the expensive ticket price pressure currently faced. And reformed commercial airline Virgin Australia may soon take its competitive edge to the ASX after Bain Capital, the firm which rescued Virgin Australia from voluntary administration back in 2020, said it will soon seek advice on an initial public offering. As for just how high airline stocks can go in 2023, the question investors are thinking about is, has the price ceiling been reached or is there further room to grow amid ongoing strong demand? Locally, the ASX extended its early January green run into the third trading week of 2023 as the key index advanced 1.46% from Monday to Thursday. The rally this week was driven by investors piling into healthcare and consumer staples stocks. The markets are currently tied to US trading and reporting season updates, China's reopening status and recession fears, with any news regarding such topics out each week causing moves in the markets. The vacant jobs and labour shortage crisis worsened in December in Australia, with data out this week indicating 14,600 jobs were shed from the Australian economy and the jobless rate increased to 3.5% in December. The figures fell well short of economists' expectations for the jobless rate to plateau at 3.4% and 22,500 jobs to be added to the economy. The winning stocks from Monday to Thursday were Nanosonics soaring over 14% on a positive trading update, including strong revenue growth on the back of a recent sales model switch in the US. Telix Pharmaceuticals rose 10.06% and Super Retail Group rallied 9.6% over the 4 days. And on the losing end, Core Lithium fell 7.5%, Capricorn Metals lost 7.37%, and Hub24 shed just over 7% after releasing a trading update earlier this week, including net inflows for the quarter broadly flat on Q1, but dropping 23.6% to $5.8 billion from record inflows achieved in Q2 of FY22. Taking a look at the All Ords, electro-optic systems soared 46.3% this week, despite no price-sensitive news out of the company, while City Chic added 46% on Brett Blundy investing to gain a 7.3% stake in the struggling retailer, and Nuix rose 27% for the week. Main Pharma and Baby Bunting led the losers on the All Ords, shedding 14.52% and 15.56%. The most traded stocks by Ballarat clients this week were Telstra Group, St Barbara, Rio Tinto, BHP Group and Woodside Energy. Investors also bought into Allchem and Westpac while taking profits from Macquarie Group, Commonwealth Bank and ANZ. And the most traded ETFs by Ballarat clients this week were BetaShares Australian Strong Bear Hedge Fund, Vanguard Australian Shares Index ETF and BetaShares Geared Australian Equity Hedge Fund. On the economic data front, next week, investors will be awaiting the release of NAB business confidence data for December out on Tuesday, with the market expecting a fall of 2 points from a decline of 4 points in November. Australia's inflation data for Q4 is also out on Wednesday, with the market expecting an increase to 7.4% for the year or 1.5% for the quarter. Overseas US GDP growth rate data for Q4 is out on Friday, with markets expecting growth of 2.8% from a rise of 3.2% in Q3. That's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday, enjoy your weekend, and as always, happy investing.